All right. So you're basically saying this nighttime job is getting to you because in the morning you want to track the market, but you should be sleeping. Like a little kid who's supposed to be sleeping, but they're watching
Yeah.
cartoons. You're watching the market.
I mean, yeah, I mean, right now there's like some of the most interesting things that are going on, like the dynamics of like the regional markets, the regional banks, like all the stuff that's happening around that. Then there's all this CPI data is always coming around, in the morning time. The PPI data is coming in the morning. So, like, it's very curious what's going on. I know that like it's better to just be a passive investor and just go into an index fund and just chill, but I actually like this stuff and I'm interested in it. So it's one of those things that like
Also,
there's a
you have a
difference.
knack for stock picking, so I think
I don't
index
have
funds would be
I don't think I have a knack for stock picking. I have a lot of principles that I try to apply to every stock that I find and see what there's mispricing on things, right? So like this whole thing with Truist Financial, I'm always looking for the bear case on
me
Truist,
too. Me too.
you know.
Me
And
too.
I found a couple, but the bear case is like not enough to justify the price where it is right now. It's like it's
Right.
stupid how low the price has gotten. But the thing
Okay,
is,
so,
like,
so let me
yeah,
ask you a question about this. Like most basic argument you have for Truist is that
mhm.
55% of depositors, which would theoretically cause the bank run, are small businesses. Is there any world in which these small businesses, laundromats, dryers, fucking bars, they decide
No,
we don't want to put it into Truist? Is there any world in
no,
which that happens that causes the bank run?
no. Like the assets are good. The assets are safe. The only area that they have a little bit of exposure is the MBS products that they have. So they have some real estate loans that they had issued quite a long time ago, and so the fair market value of those MBS products right now are lower than what they issued at. So like let's say I issue you. You remember last time we had a discussion about when you originate a mortgage, right? If I originate a mortgage to you at like a 3% mortgage, and and you pay it, you're paying your monthly mortgage, everything is good. That mortgage is at fair value is a hundred cents, right? Like 100 cents
Yeah.
to a dollar. So it works perfectly. But let's say the interest rate goes up and it gets bumped up to like 5.5, 6% on the short term side, like what the Fed just did right now. What is the value? What's the fair market value of that mortgage? It's not that people are not paying their mortgage, everything is working great. The problem is mark to market, that mortgage is actually on a fair value basis less. So how do you adjust for that? Now, what's happening is with SVB and like First Republic and everything else, they were stuck under this whole thing where they had issued all these loans and then they had bank runs come on them, right? So it was like a financial, like as their stock price started to go down, people felt scared. And so as people got scared, they started to pull their money. And as they pulled their money, these guys had to come up with the cash from somewhere to pay their depositors. So it's a whole thing that just cascaded. And so what's happening is a lot of these banks, they're actually fairly strong banks. They didn't make like stupid loans. Like if you look at 2006, 7 and 8, the whole cause of everything around that time was just dumb lending, where basically you had a lot of subprime borrowers that were getting loans that didn't deserve the loans because their credit risks. And that's not necessarily the case this time around. But this is one
So
of
the
those
mortgage
things where
the mortgage backed securities, why is that not enough of a bear case for Truist to you?
because you could just hold them. You could just hold them to maturity. You don't have to mark them down. That's the key. So right
Mm.
now, it's a 30-year loan. So, as long as it's sitting on your balance sheet, they're paying you your mortgage, you're getting an interest from it. So your net interest income is still there, right? So that's fine. The problem though that you can run into a little bit in the short term is that if you have to pay depositors more, right? So that you don't have capital flight, because that's the other problem. If right now SoFi or I don't know, like Goldman are offering 4.5, 5% on the money, and Truist is only offering 1 or 2%, you're gonna say, hey, why don't I just move my money over to Goldman and get an extra 3%?
Well, that comes down to the demographic of the depositor base, which you're arguing
Exactly.
because it's so. And now, and so that that to you, that's like a rock solid argument, which is just like if it's mainly small businesses, they're not moving to SoFi because they can't.
Exactly. Exactly. So it's not just SoFi, but like there's other banks right now.
Right.
Everyone is competing to get these depositors. Now, the good thing is because of how like Truist is and like the breadth of relationships that they have with their clients, the chances of getting hit with like a giant bank run like the other ones did is very little. And on top of it, you also have to take into security into perspective, right? So if you move money out of, let's say, PacWest or something smaller, like let's say it's a smaller regional bank, you're going to move it to a larger bank, right? That's the key. Like, so right now, JP Morgan is inundated with loans. I mean, inundated with deposits. If you go to JP Morgan right now, they won't give you money. Like, they won't give you interest. They'll give you like maybe a point or two here and there because JP Morgan is flush with cash, you know.
So did the PacWest 10% decline in deposit, did that scare you at all about the regional sector, or you think that's kind of normal for that bank in particular?
I think at this point we have to value these banks at the individual level, right? So it's almost like saying, this entire sector is going to go down, and it's like, yeah, I guess, but you're talking about banks that are down 50% year over year, right?
Yeah.
Some of them. Now, the other thing is if you look at the business, because you have to take into consideration the business side of things. Some banks make so much money on just their net interest income, right? So basically they make money on the spread of borrowing and lending and everything else, and their deposits and every like that. But there are other banks that make a ton of money on fees, right? So when you originate a mortgage, you're getting a fee, right? When you do an ATM withdrawal, you're paying a fee, right? When you're doing certain transactions, you're conducting like a wire transfer, there's a fee. So there's a lot of income that comes into these banks that are not necessarily related to the interest portion. They're also coming in from non-interest income. So
Correct.
that's a huge thing that comes into the banks too. So if you look at something like SoFi or whatever, some of them don't have a lot of those features built into their business, right? Because
they're
they
digital
don't
bank.
have that, right? They're digital bank. They don't have that necessarily like that fee structure built in. So that's the other key thing. So the non-interest income is also an important factor to look into. And then the other thing is they have an active business in insurance. So they actually provide insurance, right, for their businesses. Also, they provide wealth management services that they get paid fees for, right? So there's a lot of avenues that these guys make money, but yet they're getting lopped into the same thing as just a small regional bank that just has a ton of loans on them. There is one problem that I'm seeing though that it's not necessarily been addressed just yet. You're going to run into things in probably the next year or two with regards to like commercial real estate, right?
Yeah.
So when I say commercial real estate, we have to be very specific. Commercial real estate in the office sense, because if we say commercial real estate, that could mean multifamily, 1 to 4, four or more apartments. That's considered commercial real estate as well. But that one is actually a safe area, right? So if you look at it right now, there's still a huge demand for housing, huge demand for rental and everything else. The problem is the market in offices is where there's a big risk. So there's a lot of businesses that are still work from home. Their employees are refusing to come back to work. They're saying, look, if I can do my job from home, why do you want me to come back? And the businesses are thinking, well, if
And
they can
the reason you didn't feel
yeah.
this way about SLG is because SLG is in New York, and New York has a little bit of a
Yes.
different
Yeah.
thing than the national economy.
Yeah. So nationally, the rate of people going back to work like in the office hasn't recovered nearly as much. The other thing is like a lot of businesses, they had leases that they signed in, before the pandemic that they're still paying paying money on, but they don't need the footprint anymore. So they don't need as much space. So if you don't need the space, when your contract renewal comes up, when your lease renewal comes up, what you're going to do is you're just going to say, no, I don't need the space. Take your shit back. I'm done. Right. And then you have all these other companies that own the real estate. They borrowed money from these banks in order to finance the purchase or the construction. Right. So they're kind of in a bind too, because now they're going to say, well, look, I don't have enough of a vacancy to make any profit. So what am I going to do? Well, this is what happens. They're going to default, and they're just going to take the keys and hand them back to the bank and say, here you go, Mr. Bank.
And so when a default happens, the bank is on the hook for that? Like, who's on the hook for that?
Huh?
Who's on the hook for when a default happens?
Well, technically it's the bank, right? So like let's say it's like a house. If you buy a house, you can't pay the mortgage. You just give the keys back to the lender and say, here you go, foreclose on me, take your keys back, have a good day, have a great one. And basically the bank now is stuck with that house and the bank has to sell that house or do something with it. Now imagine this happening at the national level where you have all these buildings that are office buildings that are primarily empty, all coming on the market at the same exact time. What do you think ends up happening? That's a bad situation. Right.
So
And
in the context of Truist, you say they have one of the least exposures to commercial real estate out of all the regional banks. So let's say their commercial real estate goes, I think they have like $3 billion worth of exposure or something. Let's say that goes to zero.
Yeah.
What is that?
First of all, nothing ever goes to zero. Okay. So when it comes to like loans and stuff like that, there's always value in the assets. It's just not what the book value is dictating. Right. So there could be a $1 billion asset that may not be worth $1 billion, and maybe it's worth 200 million, because there's always a prospective buyer. Just the price has to get low enough for it to make sense, right? The other thing is a lot of this stuff is dependent on the quality of that building as well. So I think one of the mistakes that people make, especially with regards to commercial real estate right now, is saying, look, every building is the same no matter what. And it's like, no, there's a difference between a building that was built in the last 10 years that has all the amenities required to like sustain like a really nice environment, right? Like that you want to work in to attract employees, to attract businesses. You get a certain level. So those are called Class A buildings. They're high quality buildings with like a lot of amenities built into it. They have it's a much different environment. Then you have Class B and Class C buildings. These are like your older buildings that like they've been around for 50, maybe 60 years plus. They still have old electrical systems. They still have like old air conditioning systems, and they require, and they're not really like developed fully to like take on the leases of like a client who wants that higher level of access.
So you think there's a bubble in commercial real estate right now?
I mean, it's clear as day. It's clear as day that they have that happening. Now, I do want to address SLG because I did actually say, and I'm still bullish on SLG. SLG is primarily focused in New York City, right? They don't have exposure outside of New York City. The key to a lot of these commercial real estate issues is you have to really look at the region, because some regions have recovered much faster than other regions. So as an example, New York City, the occupancy is growing every day. It's like getting more and more every day. Plus it's New York City, right? New York City is New York City. On the other hand, LA is different. LA has a lot of concentration of just tech workers. And so if the tech workers get laid off, there's no one to really replace it. New York City benefits from a very, very diverse set of clients. So we have large, like we have law firms that are in New York City. A lot of the big name law firms. We've got financial industry with us. You're talking about international finances there. You've got commerce there. So you've got fashion, right? So there is so many things that New York City has. So we have a much more diversified client pool that there will always be a prospective person to lease property in New York City on the office side. That may not be necessarily the case in LA, because LA and San Francisco, they have like a lot of tech exposure. So yeah, someone asking if I sold. Yes, I did sell my SLG, but I only sold it because I wanted to buy into this bank. Truist. And then later on, Truist, I can pick up the SLG later. I think SLG is going to be fine. I think it's a great. Someone said I put on lipstick so I'd be cute. Okay, whatever.
Okay, this is the last thing I want to do. This, then we'll get to Elon. Unfortunately, guys, Carlos and Vitaly are probably not going to make it tonight. Carlos just texted. Vitaly might in like 20 minutes. But Carlos, definitely can't. So you're stuck with me and Chris today, just like good old late night stock talks. But they're busy guys, so they've been doing it all week, but today they can't make it. I found this very interesting as I've been doing DD. I did not know Truist Mobile had an app, because I think of it as like a Southern kind of product. I thought it was basically for small businesses, but they have an app. It's number 58 on the finance section of iOS. SoFi is 50, by the way, so it's pretty much neck and neck. And they have 200,000 more ratings than SoFi. SoFi has 239,000. They have 500,000, and they have a 4.7 score. This is a bank that's down 40%. That presumably, if you're number 50 on the iOS App Store, you're getting close to anywhere from 7 to 20,000 downloads a day. right? These charts are very cutthroat. Like you don't mean I know this because I'm in the app business. Like you to rank on these charts, you have to be constantly be getting growth. What do you take of this as a company that's down this much, but obviously it seems like demand for their product is substantial?
So the thing is, like, you just have to remember these apps are just a digital like a digital entryway into your banking solution, right?
Yes. Yep.
Everyone that I know, like, no matter whether you're with JP Morgan, you're with Bank of America, you're with some small bank, everyone has a digital footprint that allows you to do certain things on your app that prevents that saves you a trip to the bank, right? So everyone is going to, of course, invest in their modern technology stack, and I think Truist is great. Truist is a company that is a lot more diversified than people know, but they're also investing heavily in their tech area so that this way they can provide that exceptional customer experience, right? The key there is not so much that the number of people that download the Truist app, but if you look at the stars are up there, which means
They
that
like
the
it.
app is
Yeah.
actually good. The one of the bigger challenges that I've seen is, like, even I have TD Bank, right? I've had TD Bank since they were
Chris, real
North.
quick, I got to
Yeah,
interrupt you because at 16
yeah.
minutes, ladies and gentlemen, just the two of us, we
Hmm.
hit 300.
Yeah. Yeah.
Okay, continue. And now it's 299.
Yeah.
Continue.
Yeah. So, oh, like I was saying, yeah. So I have what is that thing called? I have access to my thing. TD Bank. I've had them for like so long. Like, I've had them since, like, they were used to be called North Fork Bank. I don't know if you guys know that. North Fork Bank, back in like the day. That was like where I opened my savings account. And then it got bought out by another bank called Commerce Bank. And then the Commerce Bank got bought out by TD. Like, so like it's three different things, but I've had them for such a long time, man. You know, so like, and I really should be switching to JP Morgan, believe it or not, but I've had it, so whatever. Plus I have like so many auto pays. I'm just being lazy about it at this point. Like, I only use it literally, it's just a account where my check, like my paycheck, gets deposited, and then like my things that have auto pay just get auto paid out, and that's it. It's like, I really doesn't do much else other than that. Like, I have a different account that I use primarily for, investing and for savings and everything else, but I try not to be very liquid when it comes to that account. So do I care if I get 5% on my money in there? Not really. Like, I'm not trying to generate income from my bank account. So yeah,
So
so
to,
just
to
yeah.
wrap up the segment, then we'll move on to Elon Twitter. I know people want to hear about that. You are trying to find every bear case for Truist, but also more regionals.
Yeah.
And, currently you think the market's throwing the baby out with the bathwater for some of the good
Yeah.
regionals, but you're really
Yeah.
still trying to dig deep and find.
Yeah. So here's a good example, like Bank of Ozark, right? Bank of Ozark is a regional bank headquartered in Arkansas. Based on the chart, if you look at it, they have a lot of commercial real estate exposure. Like, I put it on Twitter. Let me just share it with you guys real quick.
Guys, we'll talk about Tesla after this, then Robinhood, and then we will do StreamYard so people can join. So if you guys have any questions, it's just me and Chris today. So you guys can join and ask us questions.
There you go. So you guys can see the screen, right? So if you look at this is like all the regional banks out there with commercial real estate exposure. So you can see Truist as a total percentage of all of their outstanding loans. It's only about 8.7%. But even among this 8.7% is a smaller figure for their office buildings. So it's a much smaller footprint than most people realize. But if you look at Ozark Bank, right, Bank of Ozark, $22 billion in loans, 71% of those are in commercial real estate. Now, to the untrained and naked eye, people are going to say, oh my God, that's bad. That means that they're going to go bankrupt. Like, what's going to happen, right? And then if you really dig deep, and it's not hard to find it, like Bank of Ozark, SEC. You can actually go to their 10K. Well, you know what? I'm not going to do it here, but you can look at their 10K and find out that most of those loans are actually in just like multifamily housing, right? Which
Right.
is which is like not an issue. Multifamily housing, there's so much demand for it, so you don't have to worry about it. So I think that's the key. Now, Bank of Ozark is sold off because it's a regional bank with commercial exposure. Oh my God, let's all pull our money from Ozark, not Bank of Ozark. That's stupid, right? But this is how things work. Banking is about confidence. So if you tell people like, hey, this bank is illiquid, it won't have enough money for you, people will withdraw their money in a heartbeat. And if they withdraw their money in a heartbeat, they have to do something with those loans, and those loans may not on a mark to market basis be what they originated for, which is a problem. So there's
Q2, you think Truist is going to come out and smash earnings because they're just not having the same type of problems that Bank of Ozark might be having.
They're going to keep Bank of Ozark's going to be fine too, by the way. I just want to clarify that. So I think a lot of these regionals, they're going to be okay. There's no real contagion risk out there unless there's a bank run on them. That's the key. If you have a bank run and you somehow cannot get the money that you need, you got a problem. So there is a lot of people that are shorting a lot of regional banks right now. And I've been following the Reddit threads, and the Wall Streets are aping again. The Wall Street bets people are aping, by the way. Now they're like, oh my God, I need to buy puts on this regional bank. Who's the next one we're going to fuck over? So you're starting to see that same frenzy that was into this GameStop thing get into this part too, where people are buying puts on regional banks. I'm like, okay, go ahead. And some people are shorting them too. So,
all right.
So it's a crisis of confidence more than anything. So, but see, this is where the opportunities are, Amit. When you have a situation where people don't recognize real value and people are willing to sell things off on the cheap, you should be willing to buy them and chill. And that's it. So that's what's happening. That's what I'm telling you. I found Truist. They're a very strong company. They have very strong fundamentals. They have a lot of liquidity. They don't have to worry about all this nonsense with these apes trying to get in and trying to short it. And eventually,
why aren't the apes going after them? Why are the apes going after the others?
They are. They're like I said, they're picking off targets one by one who are weaker banks. So PacWest was one that was actually targeted on Reddit. I mean, let's pull it up. This will be a fun exercise in diving into things that you may not see there. So,
hey guys, we'll get into the CEO and Twitter in like 3 minutes.
We'll go into that and we'll double back while I look up the data.
So, we'll double back. That's a good call. All right. So, Elon Musk, excited to announce I've hired a new CEO for X Twitter. She will be starting in 6 weeks. My role will transition to being the CTO, overseeing product, etc. All right. I think it's AOC.
No.
Why not?
That's wrong.
I think he's secretly in love with AOC. And as a result of being in love with AOC, he offered her the job. AOC is starting to become a fucking fascist the way she's saying she wants to deplatform people. I mean, the shit she's saying is absolutely ridiculous. It is insane. So maybe she's going to take this job and just deplatform everybody. And Elon's going to fall in love with her and make him have more kids. I think that's what's going to happen.
I mean, is that supposed to be like a joke? Because I don't think that's real, man.
I'm just saying this. Let me know, the 346 people that are here in the chat. What do you think? Who's he going to hire? We did get some news on who they think it's going to be. It's this NBC lady. Let me pull her up. My God, Twitter search is so disgusting. If I type in NBC, the first thing that should pop up is the latest news on NBC. Okay, there we go. So Twitter's new CEO, this is what she is rumored. Linda, I'm not going to say her last name. She's the chairman at NBCU. She makes sure that the cock that pees has enough advertising inside of it for NBC. And she's been running their global partnerships for a long time. And she's rumored to be like a libertarian. She shares Elon's political views. Do you think she would make a good CEO for Twitter?
I haven't done any research into her, so I have no idea, man.
Okay, I think she would be, because they need advertising. Okay, they need a whole lot of advertising, and in order to not just break even but make a profit and justify this $44 billion valuation, someone who needs to run this company that needs to know what advertisers want, which is about ROI, brand safety. How can you show that our brand presence and our brand image is going to be secure and intact? It seems like this lady knows what she's doing. The question is, is she going to be able to uphold the values that Elon is talking about when it comes to free speech? And so that's where I'm like, he's going to handpick someone who he thinks really can do that first, because I think he cares about that more than ads. And that might be Grimes, his baby mama, too. That might be someone. But other than that, we have absolutely no idea.
I think it's a troll. I think he's just trolling at this point. I don't think
Low key, bro. I thought he was trolling too, and I was like, he's just gonna say he's the CEO, but maybe he's not.
There's no way that he could. He's got an alpha dog personality. There's no way that he's gonna be like he's gonna be second fiddle to the CEO. Any CEO that he puts in place is gonna be someone that basically is just there as a placeholder, and that's
I
it.
agree.
They're not gonna have any real decision making whatsoever. As long as he's at the company making all the decisions as CTO and everything else, it's just gonna be like, hey, sit in your office, shut the fuck up, and do what I tell you to do, and that's it. You know.
Okay, I'm gonna name a name, and I want to know if you agree with me on gut reaction, yes or no. Susan Wojcicki.
No.
Okay, I agree as well. Why?
I mean, look at what she did with YouTube. She was censoring people, right? She's very restrictive on what people could say. The COVID situation happened. There was like you could even mentioning COVID would get you demonetized. Like that's you really want like Elon's not going to have that guy on there. So no.
Yeah, she's a girl. I mean, people were really trying to argue on Twitter with me that I'm like, bro, Elon created OpenAI as a hedge against Google. Susan Wojcicki was the 12th employee at Google. She housed Sergey and Larry in her garage. She will always pick Google over Elon. Twitter is going to be a direct video competitor with YouTube. There's no way. She has way too much loyalty. And also, she doesn't believe in free speech in the same way that Elon believes in free speech. Right?
All right. So let's look at some of the other candidates out there. Marissa Mayer. No, Marissa Mayer was the
Yahoo chick.
Yeah,
my
yeah.
gosh.
No,
I got to pull up that thread. Go ahead, talk about
it. She bought Tumblr. She's an idiot. She has no business sense whatsoever. I mean, that's what I think anyway. Fuck her. Fuck it. She literally drove Yahoo into the ground. That's also not the person
She regrets buying Tumblr instead of Netflix or Hulu in 2013. She paid 1.1 billion for essentially a porn site, and then they got rid of all the porn. But by the time it was sold in 2019, the value of the platform was $3 million, marked from 1.1 billion. She had a chance to buy Netflix for about 4 billion at that time. Netflix now is 140 billion dollars.
Yeah, Marissa Mayer is no go. That's not going to happen. Sheryl Sandberg, she's got all sorts of issues coming, with her. Do you know the story with Sheryl Sandberg?
I knew she loves Zucks, right? Facebook loyal.
Well, so she's actually very smart, but she was using Facebook like a piggy bank to basically like plan her, using Facebook staff to plan her wedding and shit. So she was like lording over people, and I think at some point she became really toxic, and they kind of just put her on the sidelines of it. She's still on the board of Facebook, I think, but she's very smart. She's very smart. She's the one that crafted a lot of Meta's digital ads and everything else, so targeted ads. But she is, in terms of Silicon Valley, like she's toxic, or radioactive. So I would say no.
I heard she's trying to go into politics too, man. So like she has a different aspiration, I guess.
Yeah. I don't know. It's. I think if it is someone, it's going to be someone we've never heard of.
Elizabeth
Liz
Holmes.
Yeah, sure.
Bro, who's it gonna be? Look, it might be the NBC chick, and we're overthinking of it because that's just super simple. But if it's a wild card, man, I would love to see something crazy that would really shake up Twitter.
I mean,
Kathy Wood.
I no, man. I think people need to be given a chance at this. You can't just say, okay, you know what, you need to have. It's gonna be some dark horse who's proven themselves in the space that you've never heard of, but also has been really really a positive person in terms maybe it is this NBC person. I don't know. Like I said, I haven't done enough research to say who it is. I would like it to be Becky Quick, but Becky Quick's a reporter. She's not an operations person. So
Becky Quick is I heard Becky Quick makes like $6 million a year or something. Like her, Andrew Ross Sorkin, and Joe, the guy on the show, CNBC, they make a lot of money, bro. They make a lot.
Yeah.
Okay, guys. So I mean, we don't know who it is. You can keep putting in the chat who you think it is. Michelle Obama. I don't think that's who it's gonna be. It probably is gonna be the NBC lady, but if it's not, it would be exciting to see who it's not.
Yeah.
All right, let's circle back to Wall Street bets. Here we go.
All right. So you can see here, one of the things that really triggered this was when Burry put up this graph. If you guys remember, do you remember seeing this? where basically they were just outlining which banks were good,
Yeah.
which ones banks were bad. I think someone asked for clarification and actually drew up a map for people on Twitter where basically I highlighted that this is bad, this is good. Like these companies are the ones that you don't really have to worry much about. These are the ones that are in really bad shape. So you can see the ones that are in bad shape, they're pretty much one ba ba, you know. So Comerica right now is right here. So that's going to be one to watch. But you can see pretty much everyone, a lot of the discussions are around like, okay, which ones are we going to go? Which ones are we going to attack? What's next? Who's the next one that's out there? A lot of these same guys got burned because they were the ones behind FRC when FRC
Yeah.
was going down. So then they kind of like turned around and said, you know what? Screw this. We're going to go the other way now. And then, now there are some people getting into the pack W thing. Some of them are shorting that. So there is definitely some level of retail jumping in and out of these companies that normally on a bank side, like you don't really see like retail investors do anything with banks, right? Like this one's like the next bank to fail. So then people will, find out which one it is and they'll try to short it and everything else. So this is not your typical short attack where you have like giant funds coming in and trying to short the thing. I think this is a lot of, at least in my opinion, I think there's a lot of smaller accounts. And the thing is, these banks, the ones that they're targeting, are not that they don't have that much in terms of a float, so they're getting screwed over more than anything else. And the minute that you see the stock price dip because of this shorting, people are pulling their money, and so it's like almost like a cycle of it's like an inevitable cycle, right? You get shorted, your stock price goes down. So now you have depositors taking their money out. And basically now once you take the depositors' money out, people get more scared and the stock goes down further. And then more people take their money out. And it's just a super cycle of bullshit that happens when in essence, these banks could actually be fine. Like this is not 2008 where you had like a lot of bad loans that were issued. So I think the Fed really needs to really start considering doing some rate cuts, man. That's like the biggest thing that could help save these banks.
It's going to be exciting.
I think this is where I'm positioning my portfolio for the next couple of years, right? So you're seeing these banks, they've taken a nosedive. Like let's analyze Truist, right? Why I think I'm bullish on Truist a little bit. So they're net income positive. They're still generating a good amount of ROI, right? They're paying a 7.5%, almost 8% dividend based on this current stock price. And it's a dividend that they can cover very easily from their operations. So that's great, right? Now imagine right now you're getting 5% on a treasury. Now you're taking a risk by buying, Truist Financial right now. And so the risk is that, something happens to stock, it goes down, you may not get paid as much, but you could put it in a treasury that's 3 month treasury and get 5.5% or 5.25% right now. Which one are you going to pick? You're going to pick the one that's super safe, secure. You don't have to take any risk-free return, right? But what if the Fed starts lowering its rates and it goes down to, let's say, 2%? On one hand, you have Truist that are paying almost 7%. On the other hand, you have the Fed paying 2%. So you see that huge spread that's there. So people are going to say, you know what? I'd rather just fucking buy Truist and just get that out, get that done, right? So then what happens is the stock price goes up. So as the Fed lowers the interest rates, the stock will go up. So that's my prediction. So next year,
we're not going to get 2% until like 2025, right?
Well, 2% in inflation. Not the Fed funds rate. The Fed funds rate is the key that you have to remember, right? Remember, the Fed funds rate is the risk-free return that you're going to get in the short term for basically lending money in a short-term fashion to like the federal government.
That's what I'm saying.
Via treasuries.
If the Fed funds rates doesn't get to 2%, then until then, that is more attractive than buying TFC for the dividend.
Yeah, exactly. Right.
So your bull case relies on the Fed eventually getting to 2%.
Oh, dude, they're going to get there. There is okay, so when I do my calculations on what the current interest rate environment is, here's an idea. What do you think the current interest rate is in the market? There is an obvious number, so go ahead, you tell me what it is.
5.25.
Exactly. That's the Fed funds target, right? That is the official number that's out there. I think it's much higher than that, okay? Because you have two factors that are happening that a lot of people don't realize that actually add into that equation. Number one, you have what is that thing called? Roll off in the roll off by the Fed from its balance sheet. So you have QT. QT, based on some economists that I've actually been reading about, they think it's like almost like an additional 0.5% interest rate, right? Additional on top of that. And then you also have now much tighter lending conditions because a lot of these regional banks that were actually issuing loans and stuff, they're like, look, I may not be able, if I issue this loan right now and I don't have the liquidity to pay in case I get a bank run, I may end up getting screwed. So instead of loaning out that money, I'm just going to hold on to it. Unless like you're some kind of super client that's like my best friend from 20 years, I'm not going to issue that loan, which means that the availability of credit is starting to go down. That's the problem that we're starting to see affect the general economy, where Tesla went down, you had Enphase go down. Why? Because the banks are not lending as much money anymore. They're just saying, you know what, we need the money more than you guys do. We're going to hold on to it because we don't want to be caught up in a liquidity trap. So right now, that's probably adding another 50 to 100 basis points. So I think the interest rate currently right now, even though it looks like it's 5.25, is actually like 7.25 with a inflation rate of about 4.9. So
and if you think Powell's going to have to decide to cut that to be able to keep up with
the bond market is saying by the end of the summer, we're going to get our first cut, which I do expect that to happen, believe it or not. I think the economy is teetering. These banks, you don't want more banks to fail because then it becomes a super cycle of bad that's happening. The other thing is you also don't want to have a situation where all these banks get eaten up by the majors. Like you don't want
consolidate. It consolidates.
You don't want that level of consolidation. Like JP Morgan right now, it's already bigger than what they were technically allowed to do. You don't want these other banks to do the same thing, So I think at this point, even though Jay Powell is coming out and just saying outright like, oh, there's probably no cuts, that's because he cannot give the impression that these guys are going to let inflation off the hook anytime soon. So he's being very prudent with his words, but I think in the back of his head, and the bond market is saying it outright, like, hey, listen, you're going to need to cut soon because otherwise you're going to screw up the economy. So a lot of the bond
and when they cut soon, outside of tech stocks doing well because low interest rates obviously help tech stocks, why in particular do banks do well, or why do you think banks will do well when rates are cut?
Well, normally they wouldn't do well. Normally higher interest rate is good for the banks because that means that the money that they're able to lend out is at a higher rate, which means that they make more money on the spread. So they're happy usually. The problem is,
hold on, let me finish that for you. I think you're going to say the problem is they gave so many loans and mortgages at 0 to 2% or 2 to 3% or whatever in 2021 because they thought the Fed said it was transitory inflation. Mm-hmm. So when the Fed jacked it up, now if you mark to market, those loans they gave aren't as valuable given the current Fed's funds rate.
Exactly. So now if you lower the Fed fund rate, guess what happens to those assets? They become, if you mark to market, they go back up to what they're supposed to be.
Right, what they're supposed to be.
Right? So all these things on the balance sheet that are saying, oh my God, look, they're negative $12 billion, negative $20 billion, fair market value, are actually not that bad. They'll be back down to like maybe, back to par. Right. So these are the kinds of things that like you have to look into when you're investing. So I think a lot of people right now, they're like, oh my God, regional banks, I'm not going to touch them. Just remember what Buffett and all these guys say. Oh, when things are down, when the market is irrational, you should be buying. It's really hard to like do that sometimes, especially when you see a sea of red happening. So we all quote these like Buffett quotes, but very few people actually live up to them and do them, right?
And that's why it's so interesting because you finally found a company where the whole sector is gone, but you're trying to be a little bit greedy when other people are fearful because this one doesn't deserve to go with that whole sector.
Exactly. I mean, it was the same thing that happened. Like, dude, remember when Meta was down to like fucking the 80s and 90s? I was screaming at the top of my lungs. I was like, look, you guys are throwing out, like, you guys think that people are just going to stop using Meta, Facebook? They have operational cash flows up the wazoo. They were trading at an 8 PE for a company that's cash flow positive, who's led by a founder who literally for the last 20 years has been not 20, 10 years has said, I want to run the most efficient business operation possible. You know, so
The
it
big
was
concern at that time was that investors thought the metaverse was going to turn them into an AOL. And I think that was the qualitative bearishness outside of the number.
the
Right?
key to remember is that if you have a prudent CEO at the helm, they'll be willing to accept a few arrows here and there, but they're not going to screw over their legacy in order to realize some kind of dream that may not pan out.
Yeah.
Right. That was the key right there. And I think Brad Gertzner from Altimeter, dude, he literally saved Meta. Okay. Because he had the power to reason with Zuckerberg. There are a few people out there in the world that have the ability to reason with the CEOs and say, look, you're making the wrong move right now. Zuck, listen, well, I agree. You want to do the metaverse, do it, but do it in a limited fashion. Don't screw over your entire business just so that you can realize a dream that may not pan out. You know, so I think that got to Zuck. Zuck said, you know what, you're absolutely right. Let's operationally become better. And now we are where we are. And it's the same thing that's happening to Amazon, where Andy Jassy's like, look, let's do some cost rationalization. Sundar Pichai is getting the same exact.
That's why
thing
Google was up today, 117.
You guys see, exactly. So right now, Sundar Pichai, in the past, he was a little bit more cautious with AI and everything else. There's people on his side of the deal saying, look, Sundar, you know, if you don't do something right now, Microsoft is going to eat your lunch. And so Sundar, and now I think Sergey and Larry are back at Google right now, you know, just saying, hey, we are the kings of the AI. Let's live up to that. Let's do what we have to. Let's launch. I've been using Bard. Dude, I love Bard. It's actually really good.
Bad. I've been using it.
You know, so I just say, Google, for the people that think that Google is dead, y'all, you couldn't be more wrong. But I'll tell you right now, in terms of a nice turnaround play, I think the regional banks, especially if you're very selective on which ones, will do exceptionally well. I think tech will do very well going into 2024. Did you see the chart that I posted today? Because I think that's going to be a very important thing to look at.
Right, so what I'm doing right now is I'm putting the StreamYard link in the chat. This is the last podcast for the weekday edition of Finance Junkies. This is the 8th day in a row we've hit 300, which is awesome. 300. We're 10 away from 400. Let's see if we can get to 400 before we end. But thank you everyone so much for joining. Obviously, yesterday with Jeremy was huge. 700 people came. Meant a lot to us. So please feel free to join. Ask any question. You can hang out with us for the next 20, 25 minutes. And we'll go through this, and then we'll keep going from there.
All right. Can you share that? Okay. Just, yeah, there you go. So if you look at this, you know, this is basically the business cycle when things happen. So when you have when you have a recession, these are the areas that typically outperform the market. These are the areas that underperform the market, right? And it just fluctuates back and forth in the cycle. So if you see this, you can see, and they give you good reasoning why each thing happens. Since performance is generally negative in recessions, investors should focus on the most defensive, historically stable sector. So basically, if you look at it, consumer staples, these are things like Pepsi, Coca-Cola, whatever. When a recession happens, people are not going to say, yeah, you know what, I need to cut back on toilet paper.
Right.
You know, these are things that you need. Healthcare. Hey, you know what? The recession's here. I'm not going to go see my doctor. No, people are going to go see their doctor. You know, telecommunications and utilities, people are going to still pay their electricity, their gas bills, all that stuff. They still have to do. No matter whether you have a recession or not, you're going to pay your electrical bill, right? You'll figure out how to scrape and do stuff. You won't spend money on extra shit. Like if you go here to discretionary stuff, consumer discretionary, these are things like, hey, let me go on a vacation, right? People are not going to do that, right? IT spending, people are not going to say, you know what? I'm going to get the newest, latest, greatest software. I need to, without this greatest software, I can't function. No, when a recession comes, you're going to cut back. That's why we saw a lot of that decline in SaaS,
Databricks.
Yep.
All that. Yep.
In
That's
SaaS.
why Pound Quarter was even more impressive to me, to be honest.
Yeah. So if you look at here, in terms of performance for the last quarter, you can see it coming to fruition, right? You see real estate, financials are down, energy is down, basic materials is down, right? But look at all the sectors that are up. Healthcare up, utilities up, consumer defensive really up, right? So you can see that we are kind of probably in between this. Maybe we're not in 100% of a recession yet, but I think that this is where we are. So
AKA you think there's a soft landing. That's very possible.
Yeah, I wouldn't say soft landing. Let's take a step back. It's going to depend on what the Fed does going forward. That is what's going to dictate whether it's a soft landing or not, right? If they say, you know what, we are going to try to contain this inflation genie no matter what, we're not going to be flexible about it until that 2% comes, we're going to keep raising. Dude, that's not a soft landing. We're going to get hit hard. Just be ready for that. But if they're willing to be a little bit more, like, okay, laissez-faire about it, like, let's see what happens. Let's be data centric. And also, you have to remember,
CPI determines all of that. If we can get CPI at 3% or something, like,
that would be really good.
Really good.
So what you're going to see is once the Fed starts cutting interest rates, you're going to see some of these sectors starting to rebound again, right? So you're going to see consumer discretionary. People are going to say, you know what, I feel good. Like the interest rates are a little bit lower. I can go on a vacation. Boom. Financials will do well. Industrial say, you know what, I have this extra cash on hand that I can invest for the next business cycle. Let me spend money on getting this stuff. IT is the same thing. So these are the areas that are going to start, I wouldn't say suffer, but they're going to underperform the general market, right? Yeah. Whereas these are going to do exceptionally well, and then just rotate cycles like that. So right now, I think
I gotta get to these people here in the chat, but So basically, the conclusion to that is like, hopefully it's a softer landing, but it all depends on if the Fed actually cuts rates based upon where CPI is. And if we're at 4.9, I would argue by December it would be hard to not be at 3%. But we'll see. It's like someone who's 170 pounds getting to 150 is easy. Getting from 150 to 130 is a lot harder, right?
Yeah, but you know what it is? I think we have to look at the data that's coming out. I think there's layoffs happening all over the place. You're seeing a lot of cutbacks in spending by a lot of businesses. It's just the amount of time that it's going to be like that. Typically, your recessions, like, I think they're like between 6 months to like 16 months, something like that. So if we're already in a recession, that means that by probably second half of next year, we're going to be on the other side of it, but who knows?
Okay. Ani, what's up, buddy?
Hey, homies. How are you guys?
Good, man. How are you?
What's going on?
Amazing, man. First guest who said to the moon just before the earnings.
That's true. You did call it. You called to the moon on Palantir just before earnings. That is correct.
And thank you very much for taking my call. And you guys, as usual, do an amazing job.
Ani, do me a favor. Take out the AirPods, because I think the AirPods are fucking you up. Yeah, take out the AirPods.
They're going back and forth. We can't really hear you too clearly.
Yeah, just take out the AirPods, put us on speaker, and that should be much better for your question. Say something. Oh, now we don't hear you at all. Yeah, the AirPods always fuck everything up for some reason. Okay, say something. Say hi.
Hello.
Okay,
there we go. We can hear you.
Yeah, cool. So, my question, what I wanted to ask was a couple of things. Like, Chris, I think I am a little bit attracted towards SMCI. I really looked into it. So, please talk a little bit more on SMCI. Educate us. And
well,
your question is, what's the bull case on SMCI, basically?
Yeah.
So SMCI is a smaller semiconductor play. They make a lot of hardware required for AI stuff to happen. Like, they make servers, they make other hardware components that utilize the GPUs and everything else. There's a much broader discussion to be had about SMCI that maybe I'll work on a video with you guys on another time to do, because there's just a lot to cover, right? But SMCI, it was a very, very attractive play when it was in the 70s, 80s. The PE was literally single digits. It's starting to get up there, but I think they have a long runway. As long as this AI thing is a big deal, I think these guys are going to do well. I'm looking forward to seeing their numbers come out for Q1, Q2. They did say that they had some weakness in Q1, but it was primarily driven by some supply chain issues, which they were able to correct. So I think they're going to do well. I think it's a very good company. I think they're going to do exceptionally well going forward.
Yeah.
They're
Do you think they
yeah.
have any competitors in that space right
They
now?
do. They do have a lot of competitors actually. So their main competitors are things like Dell and HP Enterprise. So there are other players that provide very similar services. Um, the key differentiator for them is they're operationally they're just killing it. You know, they have a lot of great proprietary technology behind it, but they're just in terms of operations, they move very fast. They have a lot of great supply chain stuff. They know what their customers want, and they deliver to their customers exactly what the core requisites are. And so in terms of the speed at which they can deliver new hardware is what gives them the moat. And their CEO is really good too. So I would say do more research. Tell me if you found a bull case, what it was your bull
Actually, I
case on
found it pretty much attractive. So when I just took a look at it on Alpha Spread, just like how you showed, how to do a bit of research on that. So that's why I thought like if I need to do a little bit more research on that, and that's the reason why I just
Yeah.
bring that up.
Alpha
So
spread is good, but just be
mhm.
careful with alpha spread because sometimes the industry themselves, like remember, alpha spread works on trying to create DCF models and relative valuation models, right? But that means nothing if the business doesn't operate on those same metrics, and those things can change right away. So, as an example, you can say that a company is worth $180 based on this projection X, Y, and Z. But if they're not consistent with their business and somehow they fuck up, no matter what the alpha spread target was, it will never get there. You know,
Of course, yeah.
so that's where just keep in mind that the alpha spread is a good way to target a company, but you have to also consider operationally if they're able to live up to that thing. So like
it's like if you go home with a girl but she doesn't know what she's doing.
yeah,
You know what I mean?
That's not it.
She,
That's
she
not
didn't
it.
live up to she didn't live up to what you. That happened to me in college, bro. It was not a good experience. She didn't live up to the hype. So
Yeah.
the alpha spread said one thing, but the
It
reality
doesn't actually show up. Yeah.
nothing spread. You
Yeah.
know, if you know what I mean.
Nothing spread. That's funny.
All right, Ani,
Yeah.
we love you. Thank you so much, man.
Later.
Thanks. Yeah.
Crossroads. What's up, baby?
Hey guys, thanks for having me back on. Just was thinking about Palantir because I'm always thinking about Palantir. You know, I can't help it. But so the gold that they had, they sold earlier this week, and they got like a very small return. It's like 200K. You know, that's a lot, but it's small for the gold. And of course, they didn't get it because they wanted to get a return. It was because of that Black Swan event, and it's just interesting with the timing of things. So. You know, when it was initially bought, a lot of us were just kind of scratching our heads like, okay, what Black Swan event are they talking about? And of course, since then we've had inflation being a lot worse than expected, possibility of recession, which probably is not a Black Swan event because those things happen, and the war with Ukraine. And I was thinking, you know, maybe it was inflation or hyperinflation that they're afraid of, but I actually think it was a war with Ukraine spiraling out of control that they were thinking might happen as far as political instability. So as far as like timing of events and stuff. So if that wasn't the case, and if they were just worried about inflation or hyperinflation, you know, it didn't make sense, I don't think, to buy physical gold bars and bring them into their place of operation. Unless Alex Karp is like Amit and he loves his bricks, although those would be real gold bricks instead of what he
No,
has
wait,
there.
they didn't buy actually any real like gold. All they did was just buy deposit. I think they at least I think they
real
bought
gold. It was like stored in like South Carolina or something. Like that was
yeah,
like
but that's what it is. It's just like depository shares, right? So it's basically like you're paying for the representation of the gold. It doesn't move anywhere. So it's like, let's say I have 100 bars of gold and I want to sell a piece of it at a certain price. They're not going anywhere. I'm not going to take them and deliver them to you. They'll sit exactly where they are, and you'll be able to take that and sell it and, you know, move it around. I don't, like I said, I don't think no one's going to fucking try to take like, hey, let's get those gold bricks to Palantir headquarters in New York. You know,
For some reason, I was thinking that they were, but I guess normally they don't do that. I thought that was why it was in the headlines so much. But sorry, Amit.
No, I'm sorry. No, sorry. My internet was freaking. That's why I thought you stopped, but you were talking. I just have a couple of quick thoughts on this. One, I'm so happy they didn't put that 50 million in the SPACs. It's like, thank God they didn't go to SPACs. Number two, thank God they didn't buy back their own stock, because even the 200,000 they made from gold, which is nothing, is better than having bought back their stock at $20 a share. So to me, the way I look at it is like, yeah, they made $200,000. They realized it was insignificant. They were right about the black swan events, Ukraine interest rates going down, but gold didn't perform as well as it needed to, which is why Peter Schiff, doesn't really make any money, even though he keeps touting gold. I think they took this 50 million and I think they put it into short-term treasuries. So at this point, they were just like,
yeah,
but
that's the smart way to do it. Yeah.
I think it was a lot like an emergency fund, that like we don't invest our emergency funds that we need immediately for cash. It's just like, even if we have a very good investment that we're sure on, we're not going to do that. And I think that that's what the gold was really for them, was that emergency worst case black swan event. And what I think changed for them is not, of course, the inflation's going down and things are getting better. And PPI came out today; it was looking good as well. But I think the biggest thing is the situation in Ukraine. And so, what got me to think of this was yesterday when that town hall event, Trump mentioned, and I don't know if he'll be elected, and I don't think he can do this, but he's like, hey, I'm going to get these guys to sign peace on day one or within 24 hours, something like. And yeah, he's the way that Trump talks, but. It seems like more people than usual are talking about peace. And then this week, there was a from Blinken, is May 5th, so just about a week ago, an announcement that Azerbaijan and Armenia were getting ready to be able to sign peace terms. And that was, I think, one of those fears, at least that I had initially, was that Russia would get drawn in the CSTO agreement that they have, correct me if I'm wrong, but with Armenia. Because they were being aggressed against. Of course, that didn't happen, but that those things would spiral out of control. So do you think that that part of the reason why is not just that the yield on treasuries is so good, but because they're saying, okay, the black swan event probably isn't going to happen? And if so, do you think that might be like these wars or something else, that they were just like, they didn't even
basically, are they signaling to the market that things are going to get better by them selling gold, is your question?
Yes. Yep.
Chris, I think so. I think believe it or not, I think the Ukraine thing could be solved by Trump easily, because at this point, all Trump has to do is go to each side and say, look, Zelensky, you don't sign this deal, I'm going to stop supporting you. Right. I have no appetite for war anymore. And he's a new party. He goes to Putin and said, look, Putin, you withdraw your forces. You can keep Crimea, take all your shit out. I'll guarantee and I'll make the Ukrainians sign a piece of paper saying they will never join NATO ever. And the Russians will be happy with that, because that's the end of the day. That's their basic reasoning for a lot of the stuff that they're doing, is that they do not want NATO on their doorstep. So right now, the Russians, they need a victory. Even the Russians they're even though they're stronger, they're technically not a weak country from what a lot of people think, like, oh, Russia is just going to fold. No, they got endless number of bodies that they're going to throw at this, and Putin is still in charge. So at this point, the best we can hope for is a privately negotiated deal. I don't think the neocons in Washington are going to allow it. They're just going to say, no, we need absolute victory. And Zelensky is probably just like, give me more, give me more, give me more. So I don't know. At this point, I would say the best outcome that could come about is someone comes in, says, look, let's negotiate a deal. Ukraine, you can't join NATO. Sign this piece of paper saying you'll never join NATO. Russia, you leave Ukraine. We'll guarantee, that doesn't happen. And then we'll do free and fair elections in Ukraine. And that's it. And Crimea stays with the Russians. I think the Ukrainians, like, they've lost a lot of people. They can't keep throwing bodies at this war and expect to win it. I think Amit's talking.
Also, Putin likes Trump. So, like, if Trump actually did, by the way, I'm not endorsing anyone, but if he did get elected, I do think he would be able to make a deal. And Zelensky, we know Zelensky loves Trump. We know Zelensky likes Trump.
Wait, no, he doesn't.
No, Zelensky, there were phone calls. That's the whole reason he got impeached, remember? Like, they were on the phone.
No, but that's because Trump was threatening him, like, hey, you need to prosecute the Bidens. Like, that's
but my point is the fact that they're even having that conversation, like, again, I might be so stupid about this, but I do think I agree with you, Chris. Trump might be able to get something done.
The war is turning against the U.S. right now, against the U.S. and the allies. Like, it's clear as day. If you look at social media, you look at these things. It's just like you're seeing a lot of people saying, "Look, why are we getting involved in Ukraine?" Like, there's a public. I think that's one of the problems with. I don't want to say democracy, but that's the problem with democracy, is that if you want to win a war, democracies rarely win the war. I mean, they'll win a war, but they'll never be able to hold because there's this element of like heartstrings that can be tugged on at any given time, and then like you would end up losing your resolve. So I remember in Afghanistan they used to say the Americans, they have the watches, we have the time. You know what that meant?
No, what does it mean?
The Americans, they always are looking at their clock because they're always wanting to leave. The Taliban doesn't have to do anything. They're just like, we have unlimited amount of time. We'll just keep attacking you for the next 100 years. So you may have watches you're constantly looking at to see when you're going to leave. We're not worried about that. We're worried about when we could just live and just keep attacking you until the end of time. So that's the problem, where you run into. The Russians are the ones right now with nothing but time. Ukrainians are the ones that are with watches, and the U.S. is the ones with watches too, because now the U.S. is like, you have all these people saying, how much more money are we going to give to Ukraine? How much more money are we going to give to Ukraine? How many weapons are we going to give? How many people are dying in Ukraine? So there's a huge,
that's why I think when Trump answered it, he answered it beautifully on CNN, whether you agree or not. He didn't say, I don't care who wins, I want the war to stop. And the crowd ate that up. And so, by the way, everyone in the chat who thinks Chris is going off on his internet, he was in the military, so he knows just a little bit about international relations and politics and stuff like that.
Yeah.
But there is a good deal of war weariness, I think, that'll continue, and it's awful on both countries too. And I hope Ukraine wins. I mean, it'd be great, but that war does need to end at some point. But so what's interesting too, as far as the timing, August 2021 is when they ended up buying the gold. And if this was for a Ukraine type event, that happened 7 months later. So we're looking at, if they're running or front running things about 7 months out, it could presage maybe things as far as a negotiated truce within a little bit less than a year, a little over half a year. So things could change pretty quickly. And that's one of those, I'm hearing a lot of positive potential catalysts that are happening in the next year or two. And for some reason, Ukraine is not one that I'm hearing a lot of. So I think that there is a decent chance, especially with what Trump was saying the other night, of things before, even if he gets reelected, of things getting settled.
Yeah. We will see what happens. It's going to be interesting. Thank you, Crossroads. Appreciate it, man. Welcome back anytime, and we'll talk again.
See you guys.
Yeah.
Thank you, man. King Cash, what's up, buddy?
Hey, what's up?
What's going on, man? What's going on?
I got a quick question. Last time you guys were talking about real estate, so I know, I don't know your situation, Chris, if you're looking to buy a house or not, but when I was back in the day, like let's say 3 years ago, trying to buy a house in Silicon Valley, it was nuts. You had to pay like almost all cash. Everyone's outbidding each other. But now, because there's no one's really buying houses and no one's taking out loans, banks are offering 5% down. I want to know what you really think about 5% down.
I mean, the banks are going to do whatever they have to try to get people in the door. I mean, it's not just banks that are doing this. I think a lot of real estate developers are starting to say, "Hey, listen, we'll give you these sweet deals on interest rates if you guys get this house done," right? So I think the housing market is starting to slowly turn, right? Like we're starting to see inventory start building up, depending on the region you're in. That inventory build is going to come to a head, and it's going to be one of those things where we're going to see a minor correction. I don't think this is a 2008 level event where the entire market just craps and everything dies, and there's just.
I was talking about the 5% down payment, because when I bring that up to people, they're like, "Oh my God, only 5% down payment. Your mortgage rate is going to be so high." But if you just do the basic math, let's just say it's $1 million house, right? 20%, that's 200,000. 5%, that's 50,000. But if you do the math, you're only saving the difference is like $1,200 every month, right?
Yeah.
And how many months is it going to take you to save back that 150K? So like that. I know I brought it up to you before. Yeah. Like, have you looked into the 5%? And I think Amit, what you're doing, staying at home, is the smartest thing people can do.
I know. People call me incel. People say I can't get girls. I know. I'm saving up that cash. I love it.
Hey, that's so smart. Like I'm Persian, right? So like the Persian community, like when I was 18, I was like, "Mom, I want to move out." My mom's like, "Why would you pay rent?" Yeah, they'll shame you. They shame you, right? And they're like, "Why would you pay rent? You could pay yourself." Right? Then it's like then they won't want you to move out even until you're engaged and ready to get married, because then they're like, okay,
Yeah.
now you can move out and buy a house. But like for the longest time, I'm like looking at my friends, they have roommates, they have drinking, you know,
But
doing
also,
all that
bro,
stuff.
I lived in college 4 years on my own. I lived the life. It was fun. And when I got back home, I was like, all right, I'm 22. I want to actually go build something now. I had my fun in college. And also, my mom wouldn't survive if I left the house, bro. Like, there's no way
Yeah.
she would survive.
So when y'all were talking about like how to build like financial freedom, I think the last podcast and stuff, and I think in America, a lot of people want you to move out right away at 18, go get a job, get in debt, you know, and then like it's hard to become financially free or, you know, save up money. And I think if you could stay at home like for the longest time, so I think what you're doing, Amit, is really smart. So props to you guys.
Yeah. You know what? I agree with you that you should definitely consolidate down with the family as much as you can and just, save as much as you can for a healthy down payment that you can use to buy property and everything. But the way that you should factor it into your calculation is, what is the market economics look like in my time? So here's an example. When I got out of the military, it was around 2009, 2010. And at the time, the housing market had crashed, right? Now, I could have stayed with my parents for another 5 years. I wasn't seeing any girls, whatever. But I knew at the time there was an opportunity with real estate. So there was this penthouse apartment that was being built near my job at the time. And the place was a little bit more up and coming in Williamsburg, Brooklyn. And I was like, what is the opportunity cost of me staying with my parents versus investing in a piece of real estate that I know is going to be, really profitable in the future? Now, yes, I could have saved that money and just, kept it with me. But instead I bought the property and I got a hell of a deal. Like, let me tell you, the deal that I got, I'm 4x, maybe almost 5x the money that I put into that apartment. So if there is an opportunity where real estate goes down a lot, you have to take into consideration and talk to your parents and say, look, mom and dad, as much as I want to live with you, there's a big opportunity to build wealth by getting into a market that's super cheap. So right now, if and I'm sure that your mom or dad, as being a Persian, you'll understand. If you say, look, I'm not buying this house just because I want to live in it and because I want to be separate from you. It's because I want to invest in myself. Because that's the other thing I know about the Persian community. Y'all guys are money minded. You're like, no, I'm going to build myself up. I'm not going to sit around and just, do the bare minimum with my life. Every parent,
Well,
I think go ahead. Yeah.
no, I was gonna say I agree. What I was saying was just like, yeah, my parents didn't want me to go out and rent, but if I was like, hey,
Yeah.
I'm gonna buy a house, they're like, oh, cool, yeah, we'll help you
We'll
out. But
help
if
you
you're
out.
like, oh, I'm gonna
Mhm.
go rent, they're gonna be like, why would you
Yeah.
do that? They'll like look down on you, and that's like, I'll be honest, like, I always bring up Rivian to you guys because like I want to get a new car. I've been wanting to get a new car. I've had my car for such a long time, but if I went to my Persian community and be like, hey, I just bought this $100,000 car, they'd be like, look at this poor fuck. How come you don't own 3 houses, 4 houses? You know,
Yeah.
why would you buy a car? So like, for me, I see people like in the Bay Area that rent, but they drive Teslas, right? And then like I drive my shitty car, you know, like, but
But but
as long
but
as
you have a shitty car because you don't want to buy a good car, or you can't afford a good car.
no, I could afford it, but like if let's just say I bought a new Rivian, right? I can make the payments, all that stuff, or a new Tesla. But then I went to like a family gathering and they're like, oh, so Cash, did you buy a new property or anything? And I was like, oh
Right?
no,
They're
I
gonna get
got
mad
this
at you. They're
cool
gonna shame
car. They're gonna shame me. They're gonna be like, dude, look at this guy's trying to act like he's rich, you know, like,
So
Yeah.
Cash,
and then
you live in the Bay Area, which is pretty expensive. Are you stacking? Are you doing well for yourself? Like, are you actually King Cash?
yeah, well, I'm an immigrant, so like I just have the immigrant mentality. So all I gotta do is just outwork people, you know,
Yes.
and like and
And
I
so
eat the
and so
same
your
food
your
over.
training business is doing well. Like you're doing good in that.
It's doing well, thank God. I mean, I could always grow and get more, you know, but like it's doing well. I
Amazing.
timed it really well when I opened the gym because I opened it
Mhm.
right in the middle of the pandemic, like
Yeah.
right in the middle of the pandemic where um
The
people were
leasing
moving
rates
to
must have been
online.
amazing.
Exactly.
Yeah.
So I was like, hey, if I try to open this gym at this location in 2019, I'd be paying 3 times as much as I was
Mm-hmm.
paying, you know? So like, so for me, just like martial arts, like striking, you know, like you have to strike
Mm-hmm.
when the time was right. So like So I did that, and that worked out well, you know.
Yeah.
And like it's not a huge gym; it's tiny. I have to start small, you know. Like,
But you have real
obviously,
estate in California. That's a
Yeah.
lot. That's a
Yeah.
lot.
And dude, you're way ahead of the game. So many people are just like, I have this idea, this business, I'm going to do it. And they never take into consideration some of the baseline things that you need in order for your business to succeed. And sometimes it's like you said, it's about striking on the hammer, you know, when you need it. I think you made a great deal, man. I think you got it. Like, I know a lot of people that bought property during, like, literally right at COVID. Like when COVID was around, they were buying houses, and I felt stupid because one of my friends bought like a $700,000-800,000 house. I was like, man, why the hell did you buy a house like this? Like, bro, the mortgage rate is like 3%. It's for fucking 30 years. I don't give a shit. I'll live in this fucker until I said, aren't you worried if the interest rates go up, the price of the home will come down? He's like, yeah, but I don't plan on selling it. I plan on living here for the next 30 years. I'm cool. I was like, go for it. Why not? And he's doing well right now, you know?
yeah. Like going back to the Persian community, they look down on me. I'm like, I own one house. Like, you poor fuck. When I was your age, I came to this country with $200. You know, I own like half of the Bay Area right now.
How old are you, Cash?
I'll turn 34 in
Right, you're doing
July.
great.
So
That's great.
I appreciate that. Appreciate that. You know, it's
Do you have
inspiring
family?
to.
Do you have a wife and kids or anything? Or you're single?
I do. I have a wife, two kids. So
And when did you get? What age did you get married?
I got married like 28. But when I got married, like my wife, you know, at the time she was like, we were engaged, and she was like, oh, let's go rent. And I was like, look, trust me, as much as we want to rent and like have our own spot, like this is the only time we'll be able to save this much money for, like, let's just do it for 1 or 2 years, you know. And then we ended up doing that, and like that's what helped us like get a place and like invest in a business, you know, that kind of stuff.
I'll let you guys in on something. So I live right now in a 3-bedroom, 2-bath condo here in Georgia, right? Me and the wife, we do exceptionally well for ourselves. Could we buy a house? Absolutely. We can go right now and buy $1 million house easily. Tomorrow morning, we could start looking, buy it, call it a day. We choose not to. We could choose not to. No, we choose not to. And I'll tell you why. Number one, it's just the two of us, right? And right now, our total cost of being here, living here, is maybe like, with including like maintenance and everything, less than $1,000, $2,000. It means all of our disposal income right now is coming in, and we're able to save it and do
going into TFC.
Yeah, because at some point, I'm going to have a third and fourth income coming in. In which case, then when I buy $1 million house, literally, I'm never worried about losing my job. I'm never worried about losing my job. My wife won't be worried about losing her job, right? That's financial freedom, where you can go into work, be chill, be humble about things. And by the way, Cash, dude, you have an amazing family. I think that right there makes you a millionaire. That makes you the richest person in the world, because there's so many people that don't have a family that basically they can rally around. And especially for guys, I don't think, see, I'm going to turn this into a little Fresh and Fit podcast in about 2 seconds right now. So,
okay, let's take it there. Go ahead.
So I just want to say, you know, I think too many people think of us guys like, oh, we're trying to get that nice car, we're trying to get that nice house because that's what guys do. It's like, no, dude, we'll live in a cardboard box. The only reason why we do half the things we do is because of our family, like our wives, our family, our kids. We want to take care of them. We want to work our asses off to take care of them. And that's it. That's the only thing. Me, bro, I'm comfortable living in a cardboard fucking box. Okay.
Bro, I'll sleep in my gym.
Yeah. I'll
sleep butt naked on the fucking street. Just give me.
I mean, I'm not gonna go that far. I'm not going that far.
Give me some AirPods and the Finance Junkies podcast, and I'm good to go. That's it.
I'm not going that far. I don't think so, bro. If I had to choose between the podcast and the streets, no, I'm good. I'll be like, nah, I gotta get a house or something. But no, it's just that's the mentality that men have. That's just a man thing. Like, we don't need this extra shit. You know, and see, this is why I don't like that you don't like Fight Club, Amit. You I'm sure you love Fight Club, right, Cash?
The movie?
Yeah.
Yeah.
Dude, Fight Club tells you, like, if one of the quotes that's amazing is, if don't let your possessions become the thing that possesses you, or something like that, where basically your possessions end up taking ownership over your life. So in the beginning, Edward Norton was just trying to fucking buy all this shit from IKEA and to organize his house, like, oh, my life is complete because I bought this rug. It's like, no, that's not what a fucking man is about. Like, I don't know. That's not what's going to give you happiness. You know, men are about fucking, let's conquer the world, bro. Let's take care of our families. Let's take care of our kids. Let's take care of our community. And then after that, you feel satisfied. You feel fulfilled.
And the pursuit of that is satisfying. The pursuit of trying to build a gym is satisfying.
Oh yeah,
Exactly.
yeah. That's the fun part, is the pursuit. And then like one little last thing, like going back to like doing everything for some people, and your viewers might not know, like not have kids. I don't know. Chris, do you have kids?
Me and the wife are trying, bro. We're gonna get there. We're gonna get there.
Good luck. They're great, and like people ask me all the time, like I know a lot of dads, and they're like, oh man, it's a lot of work, all that stuff, and like, Cash, how do you feel about kids? Like, I'll be honest, I've never ever cooked for my mom. I've never cooked for my wife. I've never cooked for any of my exes, but my kids, like, I'll have to cook for them, you know, like, and that's how I know I really love them.
So Jay Kim put the quote on there. All right, he's like, "You're not your job. You're not how much money you have in the bank. You're not the car you drive. You're not the contents of your wallet. You're not the fucking khakis. You're not your fucking khakis."
Yeah, it's true. Well, hey, I appreciate y'all, gentlemen. I love talking to y'all. Y'all have a great night. Thanks for having me on.
Yeah,
and keep motivating us.
Real quick, when you listen to us, do you just walk around your backyard and just have us in your AirPods? That's how you consume us?
No, man, I'm doing like, I'll be like, if I'm writing emails, or I'm just outside just because like I could talk loud, and like maybe the kids might be sleeping now, we just put them into bed. But yeah, but like sometimes I'll listen to y'all at the gym, whenever like I'm there, or whenever, or if I'm driving in the mornings. So yeah.
Have the timestamps helped you?
Yeah, I mean, when I go back, absolutely. But if I'm just live streaming, I don't want to be on my phone and like drive. But like, but I'll like listen to y'all going live. But
got it.
Yeah, man, y'all are great. Thanks for having me on.
Yeah, of course.
And Chris, look into that 5%. Look into that 5% down payment.
You know what? I'll take a look. Yeah.
Just do the math between the 5% and 20%. All right, the down payment, and then how much, like,
to be honest with you, Cash, I know my own skills to fucking generate cash. So I would take the lower interest rate. I mean, I would take the lower down payment, save me 150K, put it in the market, get a nice
100%.
Take a nice 10 to 12% return on it, pay these suckers their 5, and I'm happy. I'll be like, I'll save that 7 and put it towards some other shit.
Because then you're like, for me, it's like, man, I just bought a house in the Bay Area with 50,000 instead of like back in the day where I had to like outbid each other, Anyway, y'all have a great night. Thank you.
Yep. Later.
All right. Troy, what's up, buddy? How you doing?
I have a bone to pick with you, sir.
With me?
With you. Yes.
Okay, here we go.
One, you had Mr. Flipping by Flapjack's Tesla my ass on last night.
I did indeed.
Now, the one thing I will give credit to that man for is that he put himself forward and was able to tell you numbers about a stock that he was following, and not only following, personally invested in. What is your buy target for Palantir? Put it on, put it out right now. When are you buying Palantir?
Who, me?
Yes, you.
Probably
not you, Chris. No, you, Amit.
Yeah.
What is your buy target? Citadel, Jamie Dimon, Kathy Woods. Now they all have a buy target. They all put out their stuff daily. You are now an influencer and a motivator of this stock. Your buy target matters just as much as any one of those multi-fortune. You got 40,000 shares of Palantir now. How many shares you got?
I got 3,000 shares. I said many times I've been buying at $7-8. I mean,
So your buy target is $7.50.
That was on Twitter. Yeah, I said that, but I've been buying at 7-8.
No, what is to your community if you had to tell them right now?
If I had to tell them right now, given the uncertainty,
this is not financial advice. Well, I get it.
Say wait until under 9 because I don't know if we maintain 9. But if we maintain 9, then I think
so. You're a bear on Tesla.
No.
You're saying to buy under the current stock price
for Palantir. We're talking about Palantir.
For Palantir.
Yes, I would say I think it's a little elevated right now. If it sustains 10 for the next couple of months, then yeah, 10 is fine if you think it's $100 stock. But I would not buy it right now and FOMO in, as Chris has been saying as well.
Because there are people out there with 33, 22, $15 price targets. You are not one of those people.
I don't know when we get there. I hope we get there soon.
12 months. All right. From this, what were we closed at 998, 997.
Troy, I'm not a psychic. I have no idea what the price is. 12
No, but you are an influencer, just like Jamie Dimon and everybody else. You own a significant amount of shares.
Yeah.
What is your 12-month price target?
Again, to most people, 3,000 is nothing. But look, I hope we're above $10 in 12 months. That would make me happy, but I have no clue if we.
All right. My second thing is, if you have any sympathy or any inklings that Russia or China wins in the next decade or two, sell all of your Palantir shares. Because the number one goal of Palantir is to crush absolutely and destroy the economy and the military of Russia and China, our number one and number two adversaries. If you are advocating that you hope Trump gets reelected and suddenly just gives 90,000 acres of land to Russia, again, that goes against the Palantir thesis. Palantir is going to absolutely crush Russia and China, 1 and 2. Number one, absolute enemy to the United States, and they are Western values only. So if you have any thoughts or any sympathy to Russia winning this war or China winning anything, you are not in line with Palantir. Sell all of your Palantir shares if you do not think that Ukraine is going to win. They are going to either win or they are going to die, and there will be no longer a Ukrainian civilization.
So
that is the number one.
Thank you, Troy, for the comments. We got to move on to the next person now. All right?
Yeah.
Thank you. Have a good night.
No, it's okay. I mean, look, everyone's got strong opinions.
I think he's a little drunk, to be honest. I mean,
no, it's okay. It's all right. No, you know what? People are gonna have strong opinions on this, but war is one of those things that until you really put yourself up there for it, you don't understand. There are no winners or losers in war. I mean, yes, technically there's people who end up on control and people who relinquish control, but there are no real winners and losers. All it is just fucking a lot of death all around. I think the best thing that can happen in this scenario is just people stop killing each other. There's no way that the Russians are going to allow the Ukrainians to win. The Ukrainians are never going to give up. So this is just one of those situations where all you can really hope for is a peaceful resolution. What does victory to the Ukrainians look like? What are the terms for Ukrainian victory? Does that mean that repelling all the Russians and taking back Crimea?
No, obviously he was saying nonsense. We're not going to kill the Russian economy for Palantir. He was just
no. Our goal, Palantir is a company that helps us defend against the Russians and the Chinese, so that they think twice before they fuck with us. Which is exactly why I love Palantir.
Yeah, but you didn't have to destroy. He was saying they're going to destroy Russia. That's not what .
Yeah, I mean,
for there to be a defense against an adversarial attack. But let's we got one more and then we'll end it off.
Yeah.
Thatcher's World, what's up, bro?
Hey, what's up, guys?
What's going on?
Appreciate your channel. I followed you guys for a couple weeks now and digging the content a lot. So thanks for what you guys do.
What are those computers you got behind you, bro? What are you you day trader? What is this going on?
I'm a power trader.
Yeah.
I'm working.
What does that mean?
Tonight. It's the electrical grid. Power is basically just electricity. It's a deregulated market in most of the United States. So, yeah.
So you trade the derivatives of the power market.
Market. There's a handful of different ways you can trade it. There's ICE contracts. There's physical power. Yeah, I do both.
Yeah. Nice.
Yeah. So Enphase hits home a little bit for me. I don't have an opinion on it, but I trade megawatts in power. But
nice.
Yeah, I listened to a lot of conference calls on Quarter. One that recently caught my eye, actually. I normally hate retail, but Under Armour actually caught my eye. They have a new CEO, and she has a pretty good track record at Marriott. I think if they execute, it could be a pretty good, double or triple. Not necessarily seeking your opinion on Under Armour specifically. If you want to comment on it, I'd appreciate it. But do you guys listen to a lot of conference calls, and how much weight do you put on CEOs in general, and especially new CEOs, and acting on kind of a reorg and restructuring. Thanks, guys.
I would say the CEO is probably the single-handedly the most important position that lets you track what's going to happen with a company. But also look at the board of directors, because I think the board of directors is a very important thing too, because those connections that the board of directors have in order to guide the company into the right direction can be very helpful in changing things out. So just to double back, a great CEO with a bad management team and a bad business will never succeed, right? So even if you like the CEO, if the business is really hard, you won't. It's really hard to get them to do anything. If the company culture is messed up, that new CEO is going to have a tough time changing up that company culture. So I've seen a lot of times where people are very hopeful, like, oh my God, this company is doing really bad. If they just brought in that one right person, everything is going to go great from now on. And some people are really good at that, and other people not so much. So I don't know. I'd have to really dig into their numbers. One of my brother-in-law did tell me about Under Armour like way back, but I think I looked at their debt and I said no. I said, let me take a look at what they were, but I have to do more research.
Curry on a lifetime deal. You don't think that's good enough to invest?
No, I think, dude, I love Under Armour, by the way. I have Under Armour shirts. I have Under Armour shoes, like my shoes right now.
Yeah, like literally under this shirt, bro, I have a ton of armor because like no one can fuck with me. You know what I mean? So there goes
that joke that without any punchline.
Okay, continue.
Okay.
Chris, continue.
But no, it's just I'll take a look. We could research it. I think consumer products are, like, especially if they end up resonating really well with people, they could be multi-baggers. Like one area that I think a lot of people like completely ignore that are like amazing opportunities is franchises. Like, okay, here's an example. Chipotle. I'm sure, Thatcher, at one point when Chipotle first came out, you were eating there and you're like, wow, this is freaking amazing food. There's always lines everywhere, right? Did you buy any stock in Chipotle?
I wish I would have.
Exactly. Yep. Dude, I go to this Wingstop in New York. I live in Brooklyn, and I go to this Wingstop by my neighborhood. I've been going there for like 3 years, and it fucking never occurred to me, maybe I should just buy some Wingstop stock, And then when I looked at it, every time I look at it, it's like, it's a little overvalued. It's a little overvalued. But I fucking love the Wingstop wings. They're just going gangbusters right now. It's
for sure.
Yeah. So I would say, I don't know, man. It's all dependent on the product.
Well, what piqued your interest, Thatcher? Was it just like you use the products? Like, what got you excited about them?
I've followed the stock for years. I have a pretty long watch list, and this is one of those stocks that's so beat up. And I think Kevin Plank, he's a founder, but he wasn't a great manager of the business. So what caught my eye, I guess, just recently is the new CEO and what she's done in the past at Marriott. And it has a strong brand. I think with good management, the stock could do really well. So I don't know. I follow.
How long has she been as CEO?
I think it was February or March. It's very new. Very new.
Well, looks like they are performing. The last quarter they did well. Revenue was up. Net income was up. I mean, look at it. When you have lots of green, that's good. So you want to see revenue growth, of course. So let's take a look. We can analyze it and see if this is something that's worth buying into.
Yeah, I know it's a stock no one's ever really mentioned on the channel before. I just wanted to switch it up a little bit, but I do think it has a really good turnaround story.
Okay.
Thanks for taking my call,
when did you start watching the pod?
Honestly, I got into your pod through the SoFi Weekly and kind of just followed you guys along there. So maybe a month or two.
Okay, and is this setup you have? Is this at your house or are you at an office?
No, I'm at my office right now.
So what do you professionally all day? You trade? That's what you do.
Correct. Yeah, I've been a trader my whole career. I've used to trade agricultural products, and I've traded power for about 2 years now.
So you really understand markets. Not saying you're the best trader in the world, but for you to do this all day for the past 10 years.
I'm a professional trader. I've done it for over 15 years now.
Okay, nice. So you that's so cool, bro. Like just your whole day just looking at charts and shit. That's amazing, bro. I love it. It's so dope.
See, this is one of those jobs that a lot of people think, this is going to be replaced by AI. Bullshit. Bullshit.
Not anytime soon.
No, same thing. I know a lot of people, they're like, oh, AI is coming for your job. Like, not me. I know I have a bunch of dumbass people that I work with. Like, you'll never replace them, so you'll never replace me. You know. Someone, what's the word? Someone said, oh, we used to joke around. It's like, oh, they have a human interface problem. The problem is the interface between the human and the fucking keyboard, because the guy is such an idiot. So yeah.
Catcher, last question. Do you have any long positions like Palantir or SoFi, anything like that, or you just only do trade?
I have a pretty concentrated portfolio. I have between 15 and 20 stocks that I typically have.
That's not that concentrated. Concentrated would be 5 or 10.
I don't know. I think 15. I follow hundreds of companies, so to me, 15 to 20 is a pretty concentrated portfolio.
And would you say YouTube is a source of information for following all this stuff, or you use more advanced shit than basic YouTube?
I use a handful of resources, but yeah, I don't know. I'm curious, intellectually curious. So, SoFi kind of piqued my interest a couple months ago. That's how I found you guys on YouTube. But yeah, there's a handful of resources I use, but a community like this on YouTube brings more fun to it as well.
Yeah. Thatcher, I'd look into Truist. I'd say SoFi is a great company, whatever. But
I've started to dabble actually. So
yeah, good. I'm telling you, look at Truist. Like, if you're into conference calls, you'll love the Truist conference call. CEO is great. Management knows what they're doing. They're conservative with all of their stuff. They're planning. Like, once you listen to it, you'll be like, these guys know what the fuck they're doing.
Yeah, I haven't listened to theirs yet, but I have the app Quarter. If you guys ever use that, it makes it super
great app.
Yeah. So how about this? Listen to it, and in the future, maybe in a couple of weeks, maybe a month, come back to us and tell us what you think. Because I really want to get opinions from other people, what they think, based on the stuff that I'm saying, which is okay. But I want other people to analyze it too. And I think someone who's a trader, especially in the energy market, you'll understand some of the numbers behind it too.
Yeah.
So just check it out, see what you think.
I can absolutely do that. Thanks again, guys. And I wrote a comment in the sections or in the comment sections earlier, but PMI, private mortgage insurance, is really cheap right now for what it's worth.
Yeah, I think, so just to explain to everyone on the pod, PMI is what you're going to pay. Private mortgage insurance is what you're going to pay if you have under a 20% more down payment. So that coverage, that gap coverage, is what you're going to pay PMI for.
It wasn't worth it 5-6 years ago to not spend 20%, but I would say it's worth it now. Depending on the price of your home, I mean, it's $30 to $50 a month probably.
Mm-hmm.
All right, guys. Appreciate it. Thank you.
That's awesome, man. We'll talk to you again. Thank you. Yo, Fuddbucker literally just tweeted some nonsense, bro. This man, he tweeted some fucking nonsense, bro. I got to show you guys this shit. He tweeted, he screenshotted the bricks.
Not real bricks.
And then, bro, these screenshots don't mean jack shit. These screenshots mean to fuck Home Depot. I am, like all right, I'm trying to make a joke in my head between Home Depot and Lowe's and getting
listen, this is what you need to do. Okay,
I can't think of it. There's just
this weekend.
I got nothing.
This weekend, go to Home Depot. They have these already made tiles that look like bricks. Okay, all you have to do is just plaster them right against the wall, and then it gives you that look of a brick outlay. Okay,
bro, but Chris, they're real. Like, I'm not fucking playing with you. These are real fucking bricks.
Yeah, okay. Go ahead. You just knocked on it, and you could hear the
brick,
the board. No, it's all right, man. Whatever. I'll play along with your thing. Your wall identifies as a brick wall. Congratulations. No problem.
Bro, the thing is, this wall used to be blue. If you go to my old ass videos, and then they magically turned into a brick wall. Everyone's like, how did that happen? And it was like, well, I got some bricks. Adam wants to ask a question. Bro, just ask it in the chat. You could ask it in the chat if you have one more question.
Is it Bergman? Oh no, it's another one.
No, not Berg. It's Adam Leakness. All right, so Chris, let's stay on for like 5 more minutes. Kathy buying Palantir. I mean, what were your thoughts yesterday? She got back in. What do you think?
Man, I don't know, dude. She's just, her investing style is just, you can't predict shit. Like, there's no pattern, there's no rhyme or reason. Like, just, I don't know what to say. Like, there's nothing that I feel like she wakes up in the morning and just has like a dartboard and just says, okay, Brett Wonton, throw the dart. Let's see where it lands today. We're just going to buy a whole bunch of shares. That's it. You know, that's I don't know. There is no pattern. There's no pattern. You know,
pattern, bro. That's true, man. I mean, look, I thought she would buy more today, but she didn't. So I guess they're taking some time to build out the position. But it's crazy that you guys talked about her buying it right before. Yeah, I think Carlos is the one who asked that question. And I didn't think she was coming back, to be honest. I thought they were totally done with it. But I guess they fucking came back. They thought about it.
Someone said, Chris, would you give a piece of the USA to Russia? No, I would not give a piece of the USA to Russia. No, not an inch.
Yeah, fuck that, bro. We're keeping. Look, bro, that video I sent you about Trump yesterday. I mean, like that shit. I mean, every political piece of commentary I've seen from the left and the right today is he destroyed Caitlin Collins, and they had no idea how to control him. And it was bad, man. I mean, he from a pure media perspective, he controlled the media like he always does. And if this continues to happen, he might end up being the official Republican nominee, and then we'll see what happens.
I think the Democrats want that. The Democrats want Trump to be on the other side of the ticket.
100%. 100%.
You know, I feel like this was staged. Like, hey, let's take her, let's feed her to the lions, get the Trump base all riled up so that he ends up being the nominee, and then all these other nominees like the Nikki Haley's of the world, the Ron DeSantis, the Vivek guy, they're all drop out because they're like, bro, I don't want to be in the ring with the saber-toothed tiger. And then once he comes, once those things are over and the general comes, it's like, look, you've got the evil Trump. On the other hand, he already lost one election. We'll get the other one. That's it. I think the Democrats, for some reason, I think the Democrats want Trump to be on the other side. So
I think so too. So Kelly wanted me to ask you something real quick. We don't have to answer it today. We can do it another time. TSLY. She said it's a
leveraged fund.
It's something with Tesla. It's a Tesla covered
strategy.
call ETF with a 40% dividend.
I don't know, dude.
Her boyfriend just got like a payout of a massive dividend on it.
Yeah.
And she was like, Chris, we need his opinion. So you can check it later. We could answer it next.
I'll take a look. Yeah.
Okay. So that's it for us, everybody. Thank you 310 people for being here. Thank you for everyone who called in. This is 4 days in a row. Me and Chris held it down. My fucking jokes held it down today because we were missing our two comrades. Chris, last question for you. How are you feeling so far about the Finance Junkies pod and what we're doing here?
We're doing well, man. Hopefully we can keep this growing, this community growing, and eventually, I just want to keep it growing. Let's see where this goes.
All right, let's see where it goes. We will see you guys Sunday, I think at 10 p.m. because 9 p.m. was a little bit too early for you guys. So we'll let you know on Twitter. But 10 p.m., everyone's Twitter is in the descriptions. Please follow us there. And we'll see what happens tomorrow, Friday, if stocks sell off or they stay stable. And we'll talk to you guys then. Thank you, everybody. We'll see you on Sunday. Bye-bye.